Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come.
Yeah, Wednesday. What's up, everybody? It's the Wednesday morning edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope you all had an amazing trading day yesterday as we wrapped up earnings on the biggest stock in the market, which is Apple, and that's having a little bit of an effect on our equities markets today as we're seeing the S&P up a little bit, Nasdaq up a smidge. Pretty much everything up across the board a little bit in the pre-market. After our big sell-off on Sunday, we're seeing a fair amount of recovery at the moment. But is that recovery giving us a bit of a stall? Is that stall coming in? So that and more today on the Daily Market Commentary. First of all, though, if you're new to the channel, do me a favor, click the subscribe button, hit the notification bell so you get the alerts and the updates. Remember, today is the 29th. We only got a few days left. If you want to learn more about Traders Army, go to TradersArmy.com. Use promo code HNY2020 to get your first month for $20.20. Once again, HNY2020. Get your first month, $20.20. All right, let's go ahead and dive in. The S&P today, we are up about 6.75 at about 0.2%. So let's look at yesterday's price action. So in yesterday's price action, we had a good rally up into our supply level. Nice big sell-off from that level. And then the second time we came into that level, it just kind of a little bit in that upper zone. Not a great trade as it popped just down a little bit from there, but it was good for a nice little 1-to-1 if you caught it a second time around. Now, once that happens, then oftentimes you're going to see some basing, and you had a breakout opportunity for price to rally up into the gap fill level. Now, we got to the gap fill level, and I had switched the gap fill level to a confirmation entry. And the reason being is that I just didn't feel like this level was as strong, primarily because if we continue to come back up into there, remember, I still have yet to put in a lower swing high. Right, I have a lower swing low in the S&P, but I don't have a lower swing high, and so technically our uptrend didn't end. If this becomes a new swing high and price drops, then I will have a confirmed downward trend with lower swing lows, 2 consecutive lower swing lows, one being the first lower swing low being here, the second lower swing low being here, and then that would be 2 consecutive lower swing highs, one being here and one being here. If we get a move down from here, which we have not gotten as of yet. And until we have those confirmed move downs, I'm going to look primarily for confirmation entries overall. So that's on the S&P. In the Nasdaq, we actually had a breakout trade yesterday that transpired. We talked a little bit about taking a breakout above this area. We did get the breakout in the mid-morning hours, a nice rally out of that 90.42 area. It rallied all the way up, got as high as 91.51, so a little over 100 points on that move. So for those of you that got that trade, great job. Go ahead and leave it in the comment section down below. It's always good to hear when those trades are effective. Now we've got a gap fill level. This gap fill level in here. Well, if you notice, we're basing inside of that zone. That's typically going to be a great opportunity for a breakout to the upside. So keep an eye on that for today. See if we break out above. And remember, as far as the equity markets go, we're going to see a gap up at the open. Is that going to turn into a gap and go trade today? Next would be crude oil. So looking at crude, we've rallied up off that 52 level. Talked a little bit about that yesterday. That was kind of my area that I anticipated price rallying up from. And by the way, that comes from the daily chart. My belief that we get a little rally was off that daily chart. I don't know how long that rally will go. I can see it going all the way up to this 55 area before then kind of coming back down and giving this another test. So on a smaller time period, the thing that I want to consider and look for is that I've got this supply up above me. That supply is a bit weaker when I'm basing in front of it. So we're getting a little bit of basing in front of the level. And remember, basing in front of the level is the kiss of death. I need to always monitor the arrival and how we base in front of that zone. Next would be gold. So looking at gold, We had a confirmation long setup in gold. Price came into the level, gave us an opportunity, possibly to get in, and got a little, 1.5 to 1 move away. Now you may not have gotten in if your confirmation was exactly halfway. In that case, price came through the level and told you, okay, don't get in, and that's exactly what happened as it broke the level before giving you an entry point. Now we have since rallied up from that area and come back in and gave it a retest, and we're seeing price move. And this was a contract rollover gap, but those contract rollover gaps do have some validity as price came back in and immediately closed that gap, filled that gap before then rallying up from that zone. So now I need to get rid of this level altogether. This level's not going to be one that I want to pay any attention to. We do have a little supply level right up in here. Not a great time of day on that zone, and a bit of a retest of this area here to the left. So I just, we talked a little bit a couple of days ago about a potential iron condor in gold. So, let me know in the comment section below if you trade options on futures, did this iron condor come out as something that you wanted to take the trade on? Because we did stay in between our range, and this trade worked out very effectively for those of you that understand how to trade that particular style. So right now, I just don't have a whole lot to add to trade ideas in here, and the reason being is that we're still in that sideways price action. There's no sense in forcing it. Next, looking at our bonds and currency markets, and yesterday the bonds and currencies were kind of a snooze fest, and you're going to see a lot of the same picture today. Not a whole lot to discuss in these, so I'm going to go through these ones fairly quickly. The ZN, yesterday I talked about no clear levels to look for turning points, and so I'm glad I did because, price didn't come back down to the gap fill area. We didn't rally off of any supply area, and it's just kind of stayed in between. So the same thing happens again. We can look at the gap fill area when it comes into there later on, but for now, there's really nothing to look at. In the Aussie, we anticipated this Aussie breakdown. That breakdown did happen. We got a really nice move away for those of you that caught that. And then I'm still looking at the next leg in the Aussie being a leg down as we had this rally up, and I look for this shape a lot. A very common shape that I look for is this move down and then a rally back up to what's typically a Fibonacci retracement area. And that's what we're seeing. So I think the next leg is that price continues down, which is why this area down here switched to a confirmation entry. In the euro, same thing in the euro. Now we did have a potential for a breakout above one of these levels. Market didn't really kind of come up and give us an entry on there. I'm going to leave that in case we do form a bit of a base, but we didn't get anywhere near there last night. And my entry down below me, which looks to be a limit entry, is not really a limit entry. That has to be a confirmation entry because my 4-hour is very much on the downward side, right? And so it's going to search for demand, and it's going to go down until it finds demand probably on the daily chart, as I need to go one time frame higher, and I don't have quality demand on the daily chart for a little bit. I've got an area down here, but that level's already been tested a couple of times, so I think there's room for price to continue to come down. In the Canadian dollar, so in our Canadian dollar, we did get a breakout yesterday inside of the Canadian dollar, a little bit of breakout to the upside. After we got the breakout, 1, 2, 3, 4, 5, after 6 candles, it came to supply. And the supply level really didn't do a whole lot. And so now what I'm going to do is I'm going to remove the supply, though we got a little move away from the supply. So it gave you the ability to get your target on your breakout, which is what you're looking for. I'm going to move a new breakout up here, as I think that could still be a second breakout opportunity. Next, Great British Pound, Japanese Yen. Looking at the pound, we looked yesterday at a reversal in this area, and that's exactly what we got. Nice little bounce off that level. Price rallied up, so that was a pretty good little trade as price moved up from that zone. I'm going to remove this one as of now. And actually, I'm going to leave the bottom level on for a potential breakout to the upside as that came in and hit its target. Technically, if I look at this on a 4-hour chart, my 4 hours still going a bit sideways. So, I don't really have a lot of great trades on here on the hourly chart since I've got an indeterminate level. This was a good move away, and from a structural level, this is a good area. The problem I have with it most is the time of day. So keep an eye on that zone right in there. Last is the Japanese yen, and the Japanese yen we're kind of chopping around sideways, nothing really happening in between, and so nothing to add. Just kind of leave it as be. So as far as today goes, remember, follow your rules, allow price to come into you. Remember, tomorrow no daily market commentary since we will have our live trade room. And if you got questions, please send us an email, support@tradersarmy.com. I will see you soon.